What's up guys, welcome to another fire video. It's your boy DH, and guess what, we're here with another amazing video to help you on your trading journey. You don't know, it's all about Learn to Trade JA, where I'm trying to teach Jamaicans how to trade, right? And also help them to learn a skill to pay a bill, or one or two or three, right? So the idea is that I want to show Jamaicans how easy it is to trade, or how easy it is to learn how to trade. And the only thing that's stopping you is just having the right knowledge, the right strategy, and the right mentality, right? So today we're going to be talking about market structure. Yes, market structure is what we're going to be discussing today. So hope you guys can just pay attention, grab a notebook, grab a pen, grab a paper, whatever you need to make sure that you're taking notes, because you're going to have a really good time discussing this concept, right? So, and before we continue, please, I'm begging you, support the movement, Learn to Trade JA. Please, if you love this video, if you like the content, please just follow, like, share, subscribe, comment, everything that you can do to actually give us the opportunity. So I'm just going to pause for like 2 seconds right now to give you the opportunity to like. So you have 3 seconds. Let's go. 1, 3. All right, good. Thanks for the like, guys. So we're going to be talking about market structure today. And pretty much market structure is how we view the market, right? I'm going to give you live examples, but I wanted to give you an illustration first so that you can understand how the market moves and how it is that traders are able to take trades in the market, right? So the first thing you need to understand is that, number one, the market moves in 3 directions. So write that down. So the market moves in 3 directions, right? All right, let me bring this down a little bit. It's a little bit too much. Yeah. So number one, we're gonna call these our rules, or just structures. Structure, yeah, that's it. All right. So the market moves in 3 directions, right? So the first direction that we're going to discuss is, the first one is called an uptrend. So the market moves in an uptrend. As you can see, price would probably start right here, and then it moves up, and then it pulls back, then it moves up again, and then it pulls back, and then it moves up again, and then it pulls back, and then it moves up. So what we're identifying right here is an uptrend, because each time that the market pushes, it makes a small pullback, but then continues to push. And this is what we call an uptrend. So what is happening is that the candles are actually moving in an upward direction. So what we do now is we look at areas in the market where we can identify the low, the high, the higher low, and the lower high, right? So the first thing that we're going to look at is that this, at the very bottom of this move, we call that the low. Right? So that's the low. And then this low right here creates a high. So now we call this the high. All right, let's see if we can zoom into this a little bit more so you guys can have a clearer understanding. So we started here at the low point of price. So price was here, say price is at 266 right here, right? And then over the course of orders coming in from buyers and sellers, price moved up to this high right here. But when it got to this high right here, the price got exhausted, which caused a pullback in the opposite direction. So this is what we call a pullback. And then this is now, because this is a high, this now becomes a new low. So this now is a new low. Right? So we have a low that was this. We have our initial low. Let me fix this up. So we have our initial low. Now, and then we created a high. And then we have a low. But then what do we realize about these two lows? We realize that this low, or this new low that is created, is higher than this previous low. So we refer to this as, instead of just a low, we refer to this as a higher low. So now this is what we refer to as a higher low. So if this is a higher low, and then price pushes up past the previous high, and then reaches to this point before getting exhausted again, what do we call this high? Comment in the comment section below. What would you call this high? 3 seconds. So this new high, if you said it would be called a higher high, then you would be very much correct. So right off the bat, we're seeing here, price created a low, then it created a high, it pulled back a little bit, but it created a higher low, and then it broke the previous high, went higher, created a higher high. But then price gets exhausted again right here, so now it starts to pull back again. And what do we call this? This now becomes another, you got it, higher low. So now we have a low, a high, higher low, higher high, and a higher low. And then price broke this previous high, and then it created this new high, which now becomes a new higher high. Pulls back again, and now this new pullback, sorry about that, this new pullback right here becomes a higher low. Let's get this, come on. Yeah, here we go. And then after pulling back, it creates another high, and it's now another higher high. So based on what we're seeing here, what can we summarize from when price moves in an upward trend? What we can summarize from this is that in an uptrend, let's put this in green. In an uptrend, right? So 2-second point. In an uptrend, price makes higher highs and higher lows. So that's a very important point when it comes on to market structure in terms of the uptrend. So in an uptrend, price makes higher highs and higher lows. Let me bring this down a little bit more, about 16, yeah. So that's how we identify the market trend, right? Price makes a low, then creates a high, then goes to a higher low, then goes to a higher high, creates another higher low, higher high, higher low, higher high. So whenever we're in an uptrend, you're going to be seeing prices making higher highs and higher lows. And that is what we now refer to as an uptrend. Now, if we identify this as an uptrend, how do we now identify what we call a downtrend? This is what we refer to as a high. Let me fix this to make it easier for you. So this is now, instead of the low, this is now what we call a high. Right? So if this is a high and it goes down, what would we call this? This level right here, let's change this to red. So this is the high. So this is what? The low. So price starts here and then it comes down and creates a low. But then it gets exhausted when it comes down and starts to push back towards the high. But it didn't break the high. It didn't do this. What it did is that it closed below the high. So now if it closed below the high and created that and started to move back down at this point, what do we call this level? What do we call this new high that is created? You have 10 seconds to comment below. Oh, fine, I'll give you 3 seconds. All right, so if this is a high and this is a low, and then price created another high, but it's lower than this high, then that means that this high is a lower high. High, low, lower high. So price gets exhausted and starts to move back down in this direction, and then it moves lower than this previous low. What is this current low now called? It breaks this previous low and creates a new low. What is this low now called? If you said lower low, then you're 100% correct. And then, after it created that lower low, it starts to pull back again. But it didn't break this high or this high. So it didn't break this high or it didn't break this high. It maintained this level below here. This now becomes another lower high. Price gets exhausted again, comes down here. And now this now becomes another lower low. Price gets to a point where it's exhausted again and it starts to pull back. And when it pulls back, it doesn't come and break any of these highs. It maintains this high right here. Yes, you guessed it. This is now a lower high. And then the last point down here is a lower low. So now we realize that in this move, price starts here at a high. It moves down, creates a low. It moves back up. Then it creates a lower high because this high is lower than this high. Then it moves down and breaks this level right here, this previous low, and creates a lower low. And then after creating this lower low, it pulls back and creates a new high, but this high is still lower than the previous high, which makes this a lower high. Market moves down again, and then it creates a low that is previous to this low, which makes it a lower low. Right? So after the market moves down, it moves back up again. But then this high is lower than this high. So this now becomes a new lower high. And then the market moves down again, and then now we have a lower low, right? So that is now what we call a bearish market. Sorry, let me get rid of this. That's not what we call a downtrend, actually, aka bearish market. And if you don't know what bearish market is, you can check my previous video where I talk about different candles to show you the different meanings of bears and bulls, right? So this now is a downtrend. Let's put this in red. So this now is a downtrend because market is moving in a downward direction, but as it moves, it created high, lows, lower high, lower low, lower high, lower low, lower high, lower low. This is what we call a downtrend. So what can we decipher from a downtrend? So in a downtrend, price makes lower highs and lower lows, right? So we're on our way, guys. We're on our way. So the first thing we need to understand about structure is that the market moves in 3 different directions. In an uptrend, let me give this some space. Right. So the market moves in 3 directions, right? In an uptrend, price makes, let's fix this S right here. Price makes higher highs and higher lows. In a downtrend, price makes lower highs and lower lows. But remember, I said that there are 3 moves that the market makes. The other move is what we refer to as a consolidation. And what a consolidation means is that price has no clear direction as to where it's going to go. So it is moving sideways. As you can see, price is not really moving in any particular direction. It's just moving sideways. And that's what makes it a range. So let's start and see if we can map it out. So the first move that this candle would have made, let's put this in orange. Where's this thing? Right, so the first move that this candle would have made would have been a low. Let's grab this from here. Okay. So the first move is this low. So price started at this low. Let's put a line right there, just so you can see. And then after making that low, price pushed up and created this high. So from a low to now a high. Right. So it started here in a low, then it created a high. Then it went back down and came to this point, which is what you would have called, based on what we've seen before, is a higher low. So this now becomes now, if this was an uptrend, guys, once we see a higher low form, if this was an uptrend, we're looking for price to actually go and create a higher high. But price did not create a higher high. What it did was it created a lower high. So it came to this point, and instead of creating a higher high, it created a lower high. Remember, in an uptrend, price makes higher highs and higher lows. But instead of this making a higher high, it made a lower high, which means that this is not an uptrend. And then after making a higher high, it made a lower low, which is this point right here. So making that lower low, it means that it's also not a downtrend, right? Because it made a lower high, then it made a lower low. It could indicate that it is a downtrend rather, because it's creating lower highs and lower lows at this leg. But then the next leg pops up, and then instead of price creating a lower high, which would have continued the downtrend, it breaks the previous high, and now it creates a higher high. So this now becomes a higher high, right? And then instead of price actually continuing or making a lower high, or a higher low rather, it makes yet another lower low. So as you can see, there's a lot of confusion and no clear direction on price right here. Let me fix that spelling because that don't look good. Yeah. So this is now, because there's no clear direction, price is moving all over the place, right? There's no clear direction in price because it's breaking all the rules as to whether it should be an uptrend or a downtrend. We consider this kind of structure to be a consolidation. Let's see a consolidation. This is a consolidation. So the market is not moving in any clear direction, right? So what we can summarize from a consolidation is, in a consolidation, price does not have a clear direction, aka moving sideways. Now, the reality is, guys, is that when it comes on to trading, you want to stay out of consolidation. You want to either be in the market when it's in an uptrend or it's in a downtrend. But you don't want to be in the market when it is consolidating, right? So please avoid being in the market when it is consolidating. So we're going to go over this again real quick, just for you to have it and identify the difference. Forgive me for fixing this, but I'm annoyed. I would get annoyed if I don't. Just give me a quick second here, guys. Let me fix this. I like when things look a little bit neat. This. Right. So what we have learned so far when it comes on to market structure is that the market moves in three main directions. You have uptrend, consolidation, and downtrend. And you want to be able to understand which or where the market is heading. What trend are we in? If we are in an uptrend, we're looking for buys. If we're in a downtrend, we're looking for sells. If we're consolidating, we stay out. And how do we identify an uptrend? An uptrend, as we saw here, price makes higher highs and higher lows. So this is a low, high, higher low, higher high, higher low, higher high, higher low, higher high. That's how we identify an uptrend. In a downtrend, as we can see from our notes, price makes lower highs and lower lows. So if it starts from a high, then it makes a low. Then a lower high, lower low. Lower high, lower low. Lower high, lower low. That's how we identify a downtrend. In a consolidation, price does not have a clear direction and it's moving sideways. So as you can see, from a low to a high, to a higher low, then a lower high, then a lower low, then a higher high, then a lower low, and so on. So these are the three ways in which the market moves. This is what we refer to as market structure. And this is the holy grail of understanding how and when to take your trades, guys. So please, I'm begging you, if there's anything you understand about trading, try your best to understand market structure. If you need to watch this video 3 or 4 times to get it, please do, because this is the framework of what is going to get you started on your trading journey. Understanding market structure, uptrend, downtrend, consolidation. This is the holy grail of the start of understanding your trading, right? So please make a note of this, and we're going to do some live examples shortly. So there you have it, right? Let's put structure notes. So there you have it, right? Uptrend, consolidation, downtrend. So now we're going to look at how this works in the live markets. Okay, so let's go to a live market structure. Let's see if we can do a replay. Let's go right here. Example of a uptrend. So the market is right here. This is the point that we're at, right? Now at this point, we are at a low. Now what we are looking at, guys, is these things that are red and green are called candles. I did a video. You can I'll add it to the top right corner or the top left corner, where you can click on it and go and watch back that video so you can understand what candles are and what the anatomy of a candle is, right? So candles are expression of price movement. This is telling us where price has gone, where price is going, where price is. So that is what a candle does. So this is now the start of the first movement. So this now is our low point, right? So now price creates this low, right? Now we want to see where price creates the high. Right? So price, we'll wait until the price starts to pull back. All right. So from this low, price created this level right here, which now becomes a high. So this is now our high. So now we're waiting on the candles to do some other movement. It needs to break the high or the low. So once we see it breaks this high, this now is what would now be referred to as or lower low. And then, because this high is broken, we now have to wait for it to form on a higher high. So now this now becomes higher high. So we started out as a low, we went to this high, price pulled back, created a higher low. Sorry, this is not supposed to be a lower low, my bad guys. So this is supposed to be a higher low because it's higher than the previous low. My apologies. And then after creating this higher low, it went ahead and created a higher high. So now we wait until see what market does next. If it breaks the low or if it breaks the high. Why is this okay? Let me try that again. So this is a higher high. Now, this candle is the higher high. So now we're waiting for another candle to break this high. So do we have another candle to break this high? Yes, it does. So once that we see that, this now becomes our new higher high. And this now is our new higher low. Now let us show you how it looks. So you start from here. Let me put it in green so it's easier for you guys. So we start from this low, then we created a high. Then we pulled back, created a higher low because it's higher than this low, and then we created a higher high. We pulled back a bit, created a low, which is a higher low because it's higher than the previous low, and then we created a new high. So what we can see here, based on what we've seen in our example, right? Price created a low, then it created a high, then it created a higher low, higher high, higher low, then higher high. This is what we refer to as an uptrend. See? Low, high, higher low, higher high, higher low, higher high. That's exactly what we're seeing right here. So that is our market structure. So already we see that this area right here has the market in an uptrend, and we can use a line to see that all the lows are connected. So as you can see, this line is moving up. So that means that this is currently in an uptrend, right? So that is our first move, which is an uptrend. All right, guys. So now that we've discussed what an uptrend is, and now that we've seen a live example on the chart of an uptrend, let's look at a downtrend, right? So we start here. What do we see right here? This is our first high. This is where the high is, right? And this is our high, then this would have been our low. So let's get here. This would have been our low. So now we wait to see what happens with the candles. Created a high. Now we want to see the low broken. Right. So now we have created this area right here. Which now we can consider to be a lower low. Let's see what happens. Let's see if price breaks the high before breaking the low. If it breaks the low first, did it break the low? Not quite. So it has to break the low or the high for us to know the true direction. As it stands now, we have no direction, so currently price is consolidating. And then boom, price breaks this low. So then this highest point before price breaks the low becomes our higher high. Sorry, or lower high, my bad. So this is our lower high. So low, high, lower low, lower high, and then price is now creating a lower low. Because this new low is lower than the previous low. So now this is the new low. And then now we watch and see what price does. Price goes back up. Let's see which one it breaks first. Does it break the high or does it break the low? Not quite broken. There we go. So now this, the highest point before the low was broken, is now our new lower high. And then we continue to watch and see what the candle does. So now this point was broken. So this now becomes our new lower low. And let's see if we can do one more move so that you guys can get it. So we're looking to see if the candles either break this low or break this high. If it breaks the low, it means our downtrend is continuing. If it breaks the high, that means that we might be transitioning to an uptrend. So now we need to just watch and see what happens. Right now it's consolidating. As you can see, no real movement, sideways. Sideways movement, no real movement. This is what we call a consolidation, guys. See? Let me mark it out for you. It goes up, down, up, down. It's no real movement, no higher highs, no lower lows. It's just moving sideways. And what we're looking for price to either break this low or break the high. Let's speed it up a little bit and see what happens. Don't like that break. I like when there's a clear break to the opposite side. Still not a clear break. So this now is an extended consolidation. So price is moving sideways, as you can see. If I draw a line here and then I draw a line down here, you can see that price is not moving in any clear direction. It's just moving sideways. No trend. So this is when you want to stay out of the market, guys. So right there, price is consolidating, but it still hasn't broken this low and it still hasn't broken this high. So the high is still there and the low is still there. And the reason why I say it hasn't broken the low is because you want several candles to be clear of the previous low before we consider it an actual low. So let's see how it continues. Let's go. And then now, this to me signals that this now becomes a lower low. So now let's look at it. And then this now would have been the highest point before the low was broken, would have been now the lower high. So even though there was a consolidation right here, this is still an overall downtrend because price started from this high, right? Let's go. Price had this low, it created a high, it broke the low, the previous low, creating a lower low. Then it created a high, but it did not break this previous high, so now this is a lower high. And then once it breaks the previous lower low, this now becomes a new lower low. Then it went back up, it didn't break this high, so it creates a new lower high. Then it creates a lower low. Then it consolidates a little bit, but then it creates a lower high and now a lower low. So if you look at this, what we're seeing, if I remove this from here, what we're seeing, guys, is a downtrend, right? a low. Let me put this in red. A low, a high, a lower high, a lower low, sorry, a lower high, lower low, and a lower high, lower low, lower high, and lower low. So what we're seeing here, even though it might look all that confusing, is what we call a downtrend, because price, as you can see, if I use my arrow tool, you'll be able to see price is moving down. So this is a downtrend. And as we had seen before earlier, in this area right here, where price is not moving in any clear direction, makes a high, higher low, higher high, lower high, like this movement right here, is what we call a consolidation. Let's put this in orange. So this would be our consolidation, because guess what? There's no clear direction that price is moving in. Price is basically moving. Sorry about that. Price is basically moving sideways. My apologies, guys. So this is what we call a consolidation. All right, guys. So there you have it. That is how we understand market structure. And just to recap and go over the rules of market structure, let's look at the rules of the structure, right? So the first rule is the market moves in 3 directions. The first direction is what we call an uptrend, right? And in an uptrend, put this in green, price makes higher highs, higher lows, higher highs, higher lows, higher highs. And then price also goes in a downtrend. And in a downtrend, let's change this color to red. And in a downtrend, price makes highs, lows, lower highs, lower lows, lower highs, lower lows. That is a downtrend, and you can use an arrow to help you. As you can see, uptrend. As you can see, downtrend. And then the third way the market moves is sideways. Right? And remember what we said about sideways. Let's use an arrow. There's no clear movement or clear break of structure. Everything is moving sideways, and we put this in orange. Right? So this is the rule of structure. This is an uptrend. Put this in green. This is a downtrend. Also known as bearish market. This uptrend is also known as bullish market. And this is a consolidation. Sideways. Right? So this is what you call the basics of market structure. Right? I hope you guys got value from this. I hope you learned something. Please practice by going on the chart and downloading TradingView, going on the chart and testing out if you can identify these structures. See if you can identify market structure by identifying your lower lows and your lower highs and your higher lows and your higher highs. Okay? And also, please remember to subscribe, share, comment. Let me know your thoughts on the video. And also, if you want to see more content like this, please continue to support the channel. I appreciate you guys. My mission is to teach Jamaicans how to trade. And this is what I'm doing now to ensure that Jamaicans just like you and me can learn a skill to pay a bill. So until next time, appreciate you guys for being here. Appreciate you guys for your support. I'll see you in the next one. All right? Peace. Oh, yeah. Follow Learn to Trade JA on Instagram and just continue to support the movement. All right? Until next time, peace.